So I did get a buying opportunity for CONY and HOOY this week. So we'll go over those along with updating my spreadsheet to find out what my new real price per share is on all those high yield ETFs that I do own. We'll also take a look at Google and Microsoft as they did have their earnings, and I want to show you what and then we'll take a look at the chart for Google and Microsoft as they did have their earnings. And I also wanted to show you an ASTS call that I did sell to earn a bit of premium while it's down. Hello, my friends, this is Legend. So I did get the opportunity to buy some CONY and HOOY this past week. And we're taking a look at CONY at the moment. That's the chart on CONY. Friday, we had a drop, right? Because Thursday, it closed at 1966. And on Friday, we had a drop. And this one dropped all the way down as low as 1722 and ended up closing at 1773. I did end up getting a few shares of this one, and the reason being is because it did drop, but the indicator that I use is that RSI2, and that's this indicator down here. And that's that yellow line. When it drops below that 10, that does trigger me to take a look to see if it's worth buying, because I'm looking to get shares at a discounted price. So I'm looking for that to drop below 10 on the RSI2. If it's at the bottom of the Bollinger Band, that's even more of a bonus. And of course, when it does hit this indicator, I'm looking to see if buying those shares at that price is going to benefit me on my real price per share. And we'll take a look at that on my spreadsheet. To show that buying those shares at that lower price was definitely going to help me lower my real price per share. And the same thing for HOOY. We have been coming down on HOOY, and that's because HOOD has been coming down as well. It's not just the YieldMax ETF here that's dropping. If we look at HOOD, which is Robinhood, and that ticker is HOOD, you'll see right here, we're having a drop as well on Robinhood. Now, if Robinhood can eventually turn around, level out, move up, then we're also going to see that same kind of move on HOOY. But currently we are down. And I did end up buying a few shares on Thursday. And that's the 30th right here. And why? Because again, it was below that 10 on the RSI2 on Thursday. Now Friday, when I looked at it, it was already moving back up above the 10 on the RSI2. As you can see, it's sitting at 15.76 at the close of that day. So I did not buy any more shares on Friday, but I did buy shares on Thursday. And we'll see what those, and we'll take a look at those once we update my spreadsheet. Another one I wanted to take a quick look at is Google. Now for Google, they had earnings right here on the 22nd. And what I did is I decided to buy a few shares on that 22nd, basically to try to play a little bit of that earnings play, right? And after earnings, you can see they had a drop, right? It closed on that 22nd at around 341.91 and then opened on the 23rd at 321.63. So we had almost a $20 drop in that price. Well, if I was buying shares up here, why in the world would I not buy shares if it's giving me a discounted price on Google the next day? And that's exactly what I did. Even though I bought shares right before or at around earnings, I ended up buying shares after earnings because of that price drop. Now, as you can see, after that big price drop, we have been moving up since, and it actually had a huge jump up on Friday. Friday, it moved up almost 7%. And that's almost $23 of a move up just in one day. And that is crazy, right? So glad I ended up buying some shares here to play that earnings play, because you never know if it would have jumped after earnings or if it was going to fall after earnings. Because I know looking at this chart, you're looking at it and saying, well, I bet you wish you would have waited until after earnings to buy those shares and then ride it up. And sure, if I had a crystal ball, that's exactly what I would have done. But I don't. So I played a little bit of the earnings play right here, just in case if it did get a pop up. But it did not. It got a drop. And I ended up buying more shares so that, because of the discounted price they were offering me. And then shortly after, we have moved back up on Google. So love to see it, and I'm glad I bought some more shares of Google. Now, another perfect example of why you never know what's going to happen around earnings, right? You don't know if it's going to jump up or fall down. And that perfect example would be on Microsoft, because as we can see here on Google, after earnings, we had a pretty big drop, right? But look at Microsoft. On Microsoft, here we are on those earnings. Now, had you bought some shares to play that earnings play, that would have worked out quite nice for you, right? I decided to play Google, but didn't have the cash, but did not play Microsoft, as you can't play them all, right? But had you played Microsoft in this case, at earnings, it would have gave you a nice pop up. So, as you can see, you never know around earnings time if it's going to jump up or fall down. You never know. So therefore, be sure to manage your position. Don't go all in on something, because you never know what's going to happen. Is it going to jump up after earnings, or is it going to drop after earnings? But for something like Microsoft and Google, those are long-term plays for me. I don't mind buying shares at whatever price, because I plan on holding those for the long term. Now, before we go over and update that spreadsheet to find out a little bit more on CONY and HOOY of where I bought those shares at, let's take a quick look at ASTS. And here we are on ASTS. Now, if you remember in a past video, I got assigned those shares of ASTS, and those were 100 shares, and I got assigned those shares at $70. Now, you can see right here, this is stating an average of 75.52. And that's because I did already own 100 shares of ASTS. But for the shares that I did just get assigned, those were assigned at $70. So what did I do? Well, I decided to go ahead and sell a call on those shares that I had just got assigned. And since I own those at $70, anything at or above $70 would be okay to sell at, right? Because I would not be losing money. I'm going to earn premium for selling those. I'm going to earn premium for selling that call at or above $70. And of course, if it is above 70, that's price appreciation. But if I sell it at 70, it's no price appreciation. But of course, I would earn more in premium. Okay, so I kind of picked somewhere in the middle of the road, and I sold a call at $76. Now that gives me a bit of an upside, right? Because I own them at 70, I sell them at 76. And for doing so, I was going to make about $1.45 on that premium. So that's $145 for about 3 weeks. Not too bad, right? Don't mind making a little money just for owning the shares and selling a call above my cost, so that just in case if it did pop up and say those shares are taken away, I'm not taking a loss. I would actually make money on those shares along with the premium that I earned for selling that call. But while the price of ASTS is around $60, I can sell calls above my cost and still earn premium. And just to show you an example, if we go to the options chain, and here we are on the options chain, and if we look, say, 3 weeks out, okay, so we're going to look at, say, August the 21st. We'll open this one up, and again, using that $70 cost for my shares at anything at or above that $70 would mean if those shares are called away, I don't take a loss, right? And that's what I want to make sure, that I don't take a loss on the selling of the shares unless that is part of my plan and that amount of loss is being taken up and accounted for in the amount of premium I would actually be earning. But for this example, we're going to state that we want to sell it for at least 70 or above. Now this is 3 weeks out, and if I scroll right on down to this $70 strike right here, you can see that that bid ask has a midpoint of about $3.10. So that's $310 that I could sell this call at that $70 strike and make $310 for 3 weeks. That sounds pretty good to me, right? That's good money. Because normally I like to make about 3% a month. Now this is just 3 weeks, right? So this is less than 1 month. So let's find out what that percentage is. So I'm looking at making $3.10, and how much do those shares cost me? Well, that's at $70, right? So I'm gonna make $3.10 off of that $70 capital that I have invested in it. And that's going to give me 0.04 times 100 to take it to a percentage, and that's 4.4% in just 3 weeks. Wow, right? Now, if we want to find out what that would be per month, we can basically just take this, divide it by the 3 and times 4 for, say, 4 weeks in a month. So you're looking at almost 6% roughly per month is what this would average out to be. And that, my friend, is some good money. That's good return. But ASTS is a bit more of a riskier play. So definitely do not take this as advice to get into ASTS. Do your own research, because this is not financial advice. But at 4.4% just off of this position, selling that call, that's really good. So even though that price is pretty low, I can still sell at a $70 strike and still earn over 4% on my money. But say that you wanted to make a little extra off of it, I can sell an $80 strike, right? Now that $80 strike is not going to pay me $3. It's going to pay me closer to about half that. It's going to pay me about $1.50. So what kind of percentage would that be? So $1.52 divided by that 80, and that's going to give me about a 1.9% once we take it times 100. So the percentage of that is 1.9%, almost 2% for that 3 weeks. And of course, if we wanted to split it somewhere in the middle and see what that $75 strike would be, then we can see that it's going to pay out $2.12. So that would be 2.12 divided by the 75 times 100, and that's going to be a 2.8%. That's really close to that 3%. Now that's for 3 weeks. So if we took that, divided by 3 to take it down to a per week amount, and then take it times 4 to find out roughly per month, and now we're at that 3.76%. So now we are actually earning over that 3% roughly per month by selling a $75 strike, earning $2.12 or $212 for that call that you would sell. And keep in mind, that's just the premium. That 3.7% is just the premium. That does not account for the price appreciation, because you bought them at 70 or you own them at 70 and you're going to sell them at 75. That's a $500 price appreciation, right? As each contract is worth 100 shares. So not too shabby at all. So when you're looking at some of these stocks on the more riskier ones like ASTS that has an IV of about 100%, right? So it's very high IV. But because of that, it does offer the opportunity to sell calls and puts, right? Both either or, further from that actual price of that stock. So I can go all the way down to $85 or even $90 and still earn premium. As you can see, a $100 strike is still going to be able to sell a call at $44 at a $100 strike. Now, I don't necessarily think I would do that, but you could, right? You could. Because if this thing did all of a sudden jump up, you sure would be happy that you did, because if you own them at 70 and you sold it at 100, that's a $30 price move per share, or $3,000 earned in just that 3 weeks. Now, of course, the price of ASTS would have to go to 100 and then take your shares in order for you to earn that. But with a high IV, anything is possible. It could jump up. It also could fall down just as easily as it does go up. So that's why this is a bit more of a riskier play. So now let's just go ahead and let's jump over to my spreadsheet. Let's get that updated, find out what I purchased those shares for CONY and HOOY at, and then find out what my real price per share is for each of my high yield ETFs. And here we are on my spreadsheet. And this spreadsheet is available to my Discord members, where they can enter in each of their positions that they own, enter in their distributions and the amounts that they have purchased at what purchase price they have bought them at, enter all that information in, and this sheet will help to calculate what that real price per share is, to find out if you are up or down in your position of your high yield ETF. But if you'd like to get a copy of this sheet, come on over, join the Discord. That link is in the pinned comments and in the descriptions below, where you can enter in your own positions, purchases, and distributions so that you can track your own real price per share. Because if you do not know what this number is, which is the real price per share, then you really honestly do not know fully where you sit in your position of your high yield ETF. So if you appreciate this type of content, please make sure to hit that like button, as it does help the channel out. Now let's just go ahead and start right on in, and we're going to try to push through these pretty quick. And we'll start right off with CONY. So to get to that individual sheet where you enter in all your distributions, your purchases, and such, then you go to that individual sheet, and to get to that, you just hover right over the ticker and you click the pop-up. That will take you straight to that individual sheet where it has all your distributions that you've entered in and all the purchases that you have made. So once you have entered in all those informations right here, it will do the rest for you. It does all the calculations. It updates the summary page and the individual sheets, and also calculates what that real price per share is, which is the most important part of owning these high yield ETFs. So scrolling right on back down, as I did mention, I did purchase CONY, and I purchased CONY on 7/31, And I bought those shares at $18.02. Now, how many shares did I buy? Well, I purchased 25 shares. So by buying shares under my current real price per share right here, it's going to help to lower that real price per share. So by buying those 25 shares, that's going to lower that real price per share of $25.72, and it's going to drop it down to $25.29. So that helped drop that down. And then also earning those distributions is going to drop it down even more. And we earned 29 cents. And now I show that I have 445 shares. Can I count all 445 for this 7/30 X date? Well, I purchased them on 7/31, and that was those 25 shares on 7/31. That is after that 7/30. So I cannot count those additional 25 shares. I must own those shares before the X date. And this date is the X date. 7/30 is the X date. I cannot own them on the date. I must own them before the date. If you own them on the date or after, you cannot count those shares. So in my case, I cannot count all 445. I can only count for 420. So we'll enter 420. And next week, I'll be able to count those extra 25 shares for that distribution of next week. But that 420 shares at that real price, but that 420 shares is going to help to lower that real price per share of $25.29 down to $25.01. Now, since my $25.01 real price per share is indeed over that current price of CONY, that means that if I did sell them, it would be at a loss. And that loss would be $3,239. And yes, that's a pretty good loss right there, but I have a total of $15,000 invested. And I'm only looking at taking a loss of about $3,000 if I did sell out at the current price. But as we go through these, you'll see I have more of these positions that are in the green than in the red. Because as we saw on the summary page, I was showing a total gain of just under 21,000, and we'll see what that total gain will be after entering in all of these distributions and purchases. So moving on, we have PLTY. PLTY, I have 37 shares, and we earned 33 cents this week. Now, of course, this one is paid off, and that means that I have earned more in distributions. As you can see right here, $25.93 in distributions than I actually have invested into this particular ETF, because I am showing $2,244 invested. So therefore, once my distributions is larger than my capital invested, this one will show as paid off. And therefore, anything that I make in this ETF above that point is just free and clear. So as you can see, the real price per share is a negative 9.44 because it is indeed under zero, right? So it's a number less than zero, and that 33 cents for this week is going to help to lower that even more. So that minus 944 is going to drop down to minus 978. So if I were to sell all my shares of PLTY at the current price of $28.45, I would make $1,414. On NVDY, we earned 11 cents, and I have a total of 71 shares, and that's going to lower that real price per share of $8.86 down to $8.74. And since the current price is $12.06, I would make $235 by selling these shares. I would make $235 if I decided to sell these shares. On ULTY, we earned 30 cents, and I have 56 shares, which is going to lower that real price per share of $26.99 down to $26.68. Now, since this is above the current price of $26.19 for ULTY, that means I would take a loss, but I would only take a loss of $27. Now, if ULTY moves back up to say $27 and my real price per share is still $26.68 or less, then it's going to show me as unrealized gains here, rather than that unrealized loss. I hope that makes sense. For MSTY, this one is indeed paid off as well. We're showing a minus $14.84, and I have 95 shares, and that 22-cent distribution we earned this week will help to lower that real price per share down to minus $15.06. So if I were to sell all my shares of MSTY at the current price, I would make $2,606. For SMCY, I have a real price per share of $5.13, and we earned 7 cents, and I have a total of 450 shares. And that's going to help to lower that real price per share of $5.13 down to $5.06. The current price is $4.50. So therefore, I would take a loss selling these shares, but it would only be a $252 loss if I decided to sell these shares. I am not. I am going to hold and continue to lower my real price per share. And if SMCY decides to start moving back up, I'll be sitting in a good position. For AMDY, we earned 63 cents, and I have 164 shares, which is going to help to lower that real price per share of $12.89 down to $12.26. And therefore, if I had to sell all my shares at the current price of AMDY, I would make $5,507. For YMAX, we earned 5 cents, and I have 758 shares. That's going to help to lower that real price per share of $5.35 down to $5.29. And that is indeed under the current price of YMAX. So therefore, if I had to sell all my shares of YMAX at the current price, I would make $1,576. For HOOY, I did purchase some shares of HOOY, so let's enter that in right here first. And that was on 7/30. I purchased those shares at $24.75, and I bought 25 shares. Now, since this $24.75 is indeed under that real price per share of $31.74, it's going to help to average it down. So those 25 shares is going to bring down my real price per share of $31.74 down to $30.87. But don't forget, I also get to enter in a distribution, and that distribution amount is 33 cents. And can I count all 200 shares? Well, let's take a look, because that distribution X date is 7/30, and I purchased these on 7/30. Well, that's the same date. I must own them before the X date, so I cannot count those 25 shares, even though it's the same date. I have to own them before the X date, not on or after. So I must subtract those 25 shares from that total amount of 200, which will take me down to that 175. The additional 25 shares I'll be able to count for that next distribution next week. So that's going to lower that real price per share of $30.87 down to $30.58. Very nice. But if I were to sell all my shares of HOOY at the current price, I would take a loss, and it would be a loss of $1,173 due to the drop lately in Robinhood. For QDTE, we earned 13 cents, and I have a total of 155 shares, which is going to help to drop that lower, which is going to help to lower that real price per share of $18.24 down to $18.10. And therefore, if I had to sell all my shares of QDTE at the current price, I would make $1,646. For IWMY, we earned 10 cents, and I have 551 shares. And that's going to help to lower that real price per share of $12.86 down to $12.75. And therefore, if I had to sell all my shares of IWMY at the current price of $18.77, I would make $3,316. For QQQY, we earned 12 cents, and I have 551 shares, which is going to help to lower that real price per share of $16.84 down to $16.72. And if I were to sell all my shares at the current price, I would make $2,905. For WDTE, we earned 16 cents, and I have 540 shares, and that's going to help to lower that real price per share of $21.97 down to $21.81. And that means if I were to sell all my shares at the current price of WDTE, I would make $4,030. For JEPQ, this is a monthly pair, and we will be getting a distribution on Monday. And I went ahead and entered that in at 70 cents, and I have 55 shares, which means it's going to help to lower that real price per share of $7.33 down to $6.63. And that means if I were to sell all my shares of JEPQ at the current price, I would make $2,839. And last but not least, we have DIVO, which is a monthly pair, and it pays out 18 cents this week. I have 17 shares, and that's going to help to lower that real price per share of $44.01 down to $43.82. And that means if I were to sell all my shares of DIVO at the current price, I would make $52. And that's going to wrap up all of the high yield ETFs that I do own. And to get back to that summary page, we just hover right over top of that summary button, click the pop-up, and we go right back to our summary page. And now we're showing a unrealized gain of $21,685. And as we scroll through these, you can see I am down on CONY, ULTY, SMCY, and HOOY. And the rest of them are indeed green. And when you add them all together, that's where it's coming up to this unrealized gains of $21,685. So you can see in the end, the portfolio is still positive. And my goal, of course, with all of these is to get them paid off, just like you see here for PLTY and for MSTY. The next one that's coming up pretty close, of course, is AMDY. I'm hoping AMDY can get paid off in the next 4 to 5 months. Once I get this one here paid off, then I'll have 3 of them paid off. It's just one at a time, a lot of patience, but once I've earned back all of my capital in the way of distributions, then that money that's coming in from that point on is just free and clear. I have earned back my capital and I can redistribute that however I so choose. So if you'd like to get a copy of this spreadsheet, come on over, join the Discord. That link is in the pinned comments and in the descriptions below. We'd love to have you. And I'd love for you to be able to track your own real price per share for each of your high yield ETFs. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button, as it would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.